gold and silver just got smashed for about 6 or 7 days after the U.S. election. And we had a nice recovery last week. But by Thursday of last week, I started warning everybody on my site, we got all these expirations looming. Okay. They were not just going straight back up to 2,800 in gold from here. Just because, we've seen this hundreds of times before, and now we're getting it today. My expectation, again, I told everybody this last week, I think gold had moved far enough. It was up $130 last week, up every single day last week. It moved far enough that I don't expect gold to make a lower low relative to those kind of washout lows back on Thursday, I got to do the math, 14th. We got down to 25.41 early that morning.
Gold and silver experienced a sharp decline for about a week following the U.S. election, but saw a solid recovery last week. However, caution was advised due to upcoming expirations, signaling that gold might not rally back to $2,000. Gold's strong performance last week, with consistent daily gains totaling $130, suggested a significant move, making it unlikely to revisit the recent lows from November 14th. The speaker, Craig Hemke, a respected precious metals analyst and founder of TF Metals Report, reports that gold could dip slightly but might form a positively divergent low, where prices drop but momentum weakens less severely. Silver may retest support around $29 to $30, creating a double bottom before rallying. Historically strong December trends for precious metals, coupled with potentially weaker economic data, suggest a rally could follow the current pullback, ending the year positively, especially for gold, and setting up a solid start to the following year. Craig Hemke notes the U.S. deficit reached $1.8 trillion for the fiscal year, ending September 30th, 2024, with an additional $257 billion in deficit spending in October. Since the last surplus in 2001, when gold was $290 per ounce, the U.S. has relied on deficit spending, driving gold's price to $2,700, a 9-times increase, reflecting a massive loss in dollar purchasing power. Running a surplus now would cripple liquidity, making deficit spending inevitable. If this trend continues, gold could rise significantly over the next 2 decades, potentially reaching $27,000, emphasizing its role as a hedge against fiscal mismanagement. We're about to explore the video, but first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Momentum indicators were so washed out that morning that even if we did trade down to, you pick it, 25, you'd have what the technicians call a positively divergent low where price goes lower, but the momentum isn't nearly as bad. So that would be a low. But again, I don't think we're going to go that far. That's another, $70, $80 down from here. I think we're just going to now have the first higher low in a recovery. Silver, though, on the other hand, I told everybody last week, I said, I would not be surprised to see a double bottom over just even the last 6 months, a lot of either support or resistance at 29.50. That's kind of where I think we're headed. We got to 29.71 back on the 14th. I wouldn't be surprised if we head down somewhere between 29 and 30 again, just to freak everybody out. And then you get in a rally. The economic data, I suspect in December will not be as strong as it was prior to the election last month and all the other months so far this year. December seasonally is a very strong month, Elijah. We haven't had a down December, I think, since 2016. Beginning in 2017, we've been up every single December. It was only 1.5% last December, but the average 2017 through 2022 was about 4%. And we all know January is usually a good time as well. So again, started thinking that we probably get a pullback this week due to all these COMEX shenanigans. But I think then to finally answer your question, I think we rally in large part through the month of December. We finish up what is just a fantastic year, especially in gold. And then we look forward to next year. The U.S. deficit I mentioned earlier, around $1.8 trillion deficit in the most recently completed fiscal year that ended on September 30th. The month of October, last month, $257 billion more in deficit spending. Now, again, that varies, income from taxes and stuff goes up and down monthly. And so you can't just go 257 billion times 12. You can see this trend is continuing, right? We're now over 36 trillion in debt. I looked up this morning, the last fiscal year that the U.S. ran a surplus, 2001. Okay, that was the last time the U.S. ran a surplus. Okay, nothing but deficit spending since. That 2002 fiscal year began on October 1 of 2001. The gold price, $290. Gold price today, $2,700. That's a 9x increase. You can also look at it and say your purchasing power as measured by gold, has fallen by 9x. So unless you think all of a sudden this is going to change, and it can't, the government cannot, they would absolutely destroy liquidity if they tried to run a surplus again. It would be it's not going to happen. 100% promise everyone listening. Any politician says, yes, we need to balance the budget. They either don't know how it works or they're just full of crap trying to buy votes. This will continue. Okay. I don't know if we'll go 9x again for another 23 years, but do the math. Even in this environment where the banks manage the price and their risk and hedging this and options that and gamma this, delta hedge that, whatever. Even in this environment, gold price up 9 times over the last 23 years while this has gotten out of control. So what is it? Another 9 times in the next 23 years. Elijah, what's that? 27,000? That protects you. That's your hedge. That's why, again, if your advisor hasn't suggested you get some, I think you should find a new advisor. Just take it upon yourself and get some.
Meanwhile, the post-election market optimism about reduced deficits and solid economic growth seemed unrealistic, given Washington's reliance on appropriations and omnibus spending, not budgets. Cutting government spending could lower GDP and tax revenues, negating deficit reductions. With over $1 trillion in interest expenses, structural deficits persist. Craig points out the silver's highest annual close, around $31 to $32, has never been surpassed despite mid-year spikes. If silver rallies with gold in December and posts a yearly close record, it could signal a significant breakout and draw institutional attention, setting the stage for a strong performance next year. Now, let's shift our attention to the interview.
After Trump won, as if all the market was attempting to price in, that, the economy is going to be so great and Musk is going to cut the budget deficit in half. And because the economy is so great, inflation is going to actually come back. So the Fed won't be able to cut and all this stuff. And I'm not buying it. One, it's Washington. Okay, we got to be a little more realistic about how things move. And unless somehow, I don't know. I don't think there's a line item veto out there. Hell, the U.S. hadn't even had a budget. I mean, it's just been all nothing but appropriations bills and omnibus spending packages for the last decade. So how's that going to work? Are they going to, suggest $300 billion in spending cuts? And if they do, will that actually happen? Musk can't just, wave a pen, and neither can Trump. So I'm not sure that happens. But then even if you boil it down even further, Elijah, if you were to look at GDP growth, just the government statistics, not the, we know real GDP should be lower because inflation is actually higher than they report, just the straight up numbers, 3% in this most current year. And you put those in nominal dollars, it almost equates perfectly to the amount of deficit spending in the last fiscal year. So any reduction in government spending is going to bring with it a really almost a dollar for dollar reduction in GDP. And that means not necessarily dollar for dollar, but a reduction of income to the government. Okay, so if the economy slows because government spending slows, so then all of a sudden tax revenues fall. So you could theoretically cut spending by $300 billion, but because tax revenue to the government slows and falls by $300 billion, your net deficit's the same. So then you can talk about the math being the math and over $1 trillion in interest expense and all that kind of stuff. That's what I mean. It was all kind of a hysteria those 6 or 7 days after. I don't think it was realistic. That's why I use that term hysteria. All of this stuff is still in place. And so, I expect these long-term trends to continue. I'll give you one more thing to watch, Elijah. As we get into December, the highest annual close for the silver price is something like $31 or $32, something like that. Now, we've had all, these instances where we've traded well above there, but the final, New Year's Eve close has never been higher. So you think of an annual chart, not a quarterly chart or a monthly chart. You and I have talked about this before. Remember, we talked about this with the gold price earlier this year. It's those really, really long-term charts that give you the secular trend and breakouts and things like that. And it's those things that drive the home offices, the hedge funds, the institutions to take notice. So if, we do get a recovery, gold bounces back in December and somehow drags silver with it, and we get to New Year's Eve and silver is posting its highest yearly close of all time, that may really set us up for an interesting year in silver next year too.
Gold and silver reflect the broader economic and fiscal landscape, driven by structural deficits, historical trends, and institutional interest. While market mechanics and expirations influence short-term fluctuations, the long-term outlook remains positive, with gold and silver positioned as critical hedges against economic instability and inflationary pressures. A solid close to 2024, especially for silver, could pave the way for significant gains in the coming year. How might a record annual close for silver impact institutional investment strategies in 2025? What factors could accelerate gold's trajectory toward the projected $27,000 over the next 2 decades? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up and don't forget to subscribe to stay informed. Thank you for joining us on this journey.